Hello and welcome to the lesson for tonight. My name's Nathan. I'm with Instant Small Biz and ISB University. Let's get right into it. Tonight's lesson is tax forms for small business owners, and this is kind of a part one, specifically or primarily for the solo business owners, even though we'll go through all the different types. So, sole proprietorship and single business member LLCs. These are businesses basically that have one business owner. You don't have a partner, you're not a corporation. These are the single solo business owners. And what you'll do is you use your Form 1040 that everybody uses. Use to file your individual tax return. Business owners will need to complete additional schedules. So 1040s have schedules that come along with it depending on your situation. One of your situations may be you're owner of a business, of a small business. That's when you use Schedule C. Okay? Schedule C is basically the gross profit and loss from whatever business you're running, whether you're a sole proprietor or you file for LLC and you're the solo member. So a little more about the LLC. Again, it's the profit and loss for whatever business that you're running. And this is going to go back and connect with your personal tax returns. Okay. Again, it's for sole proprietorships and single member LLCs. Those are the different types of businesses that have single members as the owners. And then this is where you come in, and where you come to find out the benefits of being in business is when you get to have your write-offs and deductions. Okay. Where you enter your expenses on things like insurance, phone, service, travel, meal and entertainment, office supplies, taxes, wages paid, and more. You can write those off, or you can basically, the money that you spend on those as a business is not part of your taxable income when they determine how much of your income gets taxed. Okay, so it lowers that amount. If these were for personal reasons, this does not happen. But when it comes to a business and it needs to spend this money to operate, we don't pay taxes on it. Okay? Now, that's the benefit of starting your business and sliding a lot of these things that are traditionally personal. Once the business uses them, you can deduct them. Now, if you make over $400 in a year, you must pay self-employment tax. So a lot of people forget about that. Form 1040 SC, the self-employment tax. So this is tax based on, this will be taxed on the profit that you make. So keep that in mind. If you don't make a profit, if you make a loss, then you don't pay a self-employment tax. Okay? This is for sole proprietors and LLC members. No matter how many members are in the LLC, they pay a self-employment tax. And then what the self-employment tax is a Social Security and Medicare taxes. Okay, employees get these taken right out of their check. They'll see them in their check every week or every paycheck. Business owners pay it through the self-employment tax. And there's a tricky way that we'll show you how they calculate it, but I'll let you know now it's roughly 15%. So keep that in mind. When you're self-employed and you start making a profit, if you make $40,000, 15% of that is taxes. And it's hard to come up with at the end of the year unless you've been pre-planning for that. If you've already estimated what there's going to be and start paying it along the way, or put it in some type of savings along the way throughout the year. Okay, so that shows the importance of all that. All right, for 1099 miscellaneous. Now, I put this in here because a lot of our student members start their businesses and are working as freelancers or independent contractors, or just self-employed, to where they get 1099s from their regular clients, or their or just from their affiliate programs, things of that nature. So this replaces your W-2. You still just put this information into your 1040. All right, it's a catch-all for income like prizes, awards, bonuses, and commissions. Okay, so you'll get this from different companies. If they're outsourcing, then they might be sending out 1099s to their freelancers and independent contractors. And we'll get into later in the course about when you become in a situation where you need to pass out 1099s and file those for yourself as a company. All right, tax forms for LLCs. Again, as a solo owner, you report your income and expenses using a Schedule C, and you report it all on your personal tax returns. Okay. For LLCs that have 2 or more owners, then that's considered a partnership, and you will file a Form 1065 every year for the company, and then each owner will file a Schedule K1 along with their 1040. All right, to report their share of the earnings of the business on their personal tax return. So notice this, that if you're an LLC period, whether it's 2 or more, and if you're solo, and if you're a sole proprietor, your information is going to go on your personal taxes eventually through some type of schedule. Okay, the only time that doesn't happen is with a corporation, which is its own entity completely, and we'll get into that. Okay, so if you want to be taxed as a corporation, there's a couple reasons. There's a benefits and drawbacks of that, but you can opt to be taxed as a corporation while you're still a sole proprietor, while you're still an LLC. Okay, one reason is to get around that 15% social self-employment tax. But there are additional expenses when you're being taxed as a corporation. Usually when you're taxed as a corporation, you're going to need to hire a tax professional and a bookkeeper. Okay, so you have to weigh those expenses versus the 15% self-employment tax. Okay, so there's a point where this does become beneficial. It's usually $70,000 to $100,000 a year in profit, what I've noticed before, as far as being beneficial to opt over to be taxed as a corporation. Now the forms for that, Form 8832 is the form that you use to apply to be taxed as a corporation. Once you're taxed as a corporation, or once you're approved to be taxed as a corporation, then instead of all the Schedule C's and the Schedule K1s and the 1065s, you're going to be using Form 1120 and 1120S to file your tax returns, just like corporations do. All right. There are a lot of forms. We're just going over the main ones, that cover most businesses. All right. Additional forms may be necessary. So these are some of the more popular forms again. All right. And I'm going to go over these individually because you'll start to see what types of forms that they have in existence out here, right? And you'll also see some of the primary ones that you might be needing. And the first one is the 8829. Form 8829 is for your home office. If you use part of your home to be a home office or a warehouse, or you use your home as part of your business expenses, then you can put this information to deduct those expenses on your taxes. I'm going to go through these a little quickly because I'm going to give you access to this information. And we're going to speak on these more in detail later on in the course, so keep that in mind as well. So Form 8283 is for non-charitable gifts, or non-cash charitable gifts. So if you give away your services during the holidays, you're cutting hair, you give away furniture, things of that nature to charitable organizations, then you can write that off if it's more than $500. The 8825 is for real estate income expenses as a business. So, and some of our other courses, your students have set up LLCs to purchase property. So when we have you do that, there's for different reasons. But once you start making money and you have income and expenses on that property under the LLC, you'll use Form 8825 to calculate and file that information. All right. So, a couple of schedules: Schedule F and Schedule EC. Again, depending on your situation, this is attached to your personal 1040. Schedule F is for farmers. EC is to help you make your estimated tax payments throughout the year. Like, again, once it starts to get complicated, once you start making money, so you want to be prepared for that. All right. Form 720 is used to pay your business excise tax. So depending on your business and what your product and service is, sometimes there's an extra tax called an excise tax. These are industries that are either big, that are big on import or export, that are big on legislation, or that are big on the economy. So the examples we got here is gas, alcohol, tobacco, coal. If you want to start an airline or a phone service company, you'll be paying an excise tax. Okay, Form 4562 is used to report the depreciation and amortization of property, vehicles, startup costs, and things of that nature. Now, basically, what that is, if you owe money or if money's owed due to you, you can spread it out across several tax returns to offset some of the things that may happen in the future. Okay, that's popular and it's very beneficial. So that's a form that's often used as well. Form 7004 is the 6-month request for extension. It's basically an extension to file your tax returns that you hear about all the time. This is for corporations. The 4868 is for sole proprietors and single member LLCs. Okay. One thing to notice, as I say there, this is just to waive the fees. So you don't get late fees for 6 months. That's when an extension is. And you have to file these forms before the due date to file your taxes to get this extension. All right. And then the 1040A is the Schedule A is another schedule to your personal 1040 that itemizes your personal deductions. And I put that in there because a lot of our students need those. And the members in our group, we teach that we have to separate the business income from the personal income early on. So there's ways to itemize your business, and then Schedule A, if you need to itemize your personal deductions, that's what's used for that. So I'll put that in there. All right. And we had a member FAQ session, and these were the top 3 questions. Can I use one LLC for multiple businesses? The answer is technically no. You'll be one business. You'll just be doing different things, and you can use different names, right? So one business can operate in different industries under different DBAs. They will share liability. What that means is, your company can operate in many different things. You can have one company that operates as a restaurant and as a printing company, all right? And as a real estate investment group or whatever. But you must understand that, and you can use different names for them, use DBAs. But what you must understand is that they will share liability. And the reason for getting an LLC is to limit your liability. All right, you don't want to get sued in a restaurant and your whole portfolio of real estate is in jeopardy. You want to set up different LLCs. I know an owner of a taxi company, and he puts an LLC for each car. So if he has issues with one car, there's a lawsuit, there's an issue with the driver out there in New York, and he gets sued, he only loses one car. So there's a strategy behind using LLCs efficiently. But right off the bat, you may want to be only operating in one and try multiple businesses. That's fine. But when you get an opportunity to protect your businesses from each other, you need to take advantage of that. Okay? What if I'm late filing business taxes? If you're late, you're late. It's just like your personal taxes. You can file for an extension of 6 months to try to relieve the late fee. You have to file before the deadline. Even if you don't, you're accruing penalties for being late filing and being late paying if you end up owing. So you just want to file as soon as possible. Okay, and deal with the results from there. All right. And can you get a business tax refund? A business tax refund is technically possible because refunds are giving you something back that you spent. So many companies do estimated payments yearly throughout the year. If there's an overpayment, you can get a refund on that if you want, or you can put it as credit toward the next year's. So you have that option. And it's also what I mentioned earlier, technically only C corporations are able to get a business refund because they're the only business that's its own entity, and those refunds are not going back to owners, not going back to schedules and back to 1040s. Okay, so technically a business tax refund that comes only back to the business would be through a corporation. And that's where you see the refunds mostly, because they do estimated payments at large amounts. All right, a couple of final things here. Upcoming in the course, I put this here because this is where a lot of people start to get questions. So things start to pop in your head. So we'll talk about it later on in the course, about business operation tax forms, business tax forms for managing employees, and business tax calendar, as well as state tax forms. So because there's more information there about, for instance, the tax calendar for businesses. The deadlines are different than from personal, so you want to be aware of that, and they're throughout the year depending on what you need to do in your situation. So that's why you need a professional that does this for a living and a full-time basis, and they'll be able to know exactly what benefits you the most. Okay, so as soon as you can afford this, a professional as far as bookkeeping and taxes, you want to take advantage of that. But you still want to understand whether before or after you get them. It'll save you thousands of dollars on the front end understanding this stuff yourself, and it'll save you thousands of dollars on the back end making recommendations and keep an eye on your tax accountant later on. All right. So I want to add that this is not tax advice. This is tax information. I'm not big on tax advice. Even if you do get advice, you use it as information and make your own decisions for your personal situation. So tax advice comes from the professionals. But again, you want to get tax information, tax regulations information, I should say. All right. Reap the benefits of clean tax returns is very helpful for your business credit, for lenders, for investors. They want to see good, accurate, up-to-date, profitable tax returns. So keep that in mind. And then report what you can prove by any means. And basically, that is the audit proof system, is to report what you can prove. And if you understand the rules and what you're trying to do throughout the year, then it's not hard to do. You keep a paper trail, keep an electronic trail, and keep things together. We'll show you a spreadsheet. We'll show you some software, and then and you can do it yourself until you're able to afford a bookkeeper and a professional accountant that'll handle those things for you. All right. All right, that's it for this part one of tax forms for small businesses. Again, we'll get into some other things. We'll get into the part two because we got some more forms to get over and we got some more angles to discuss from taxes. All right, I'll talk to you later. Soak this in, take some notes, and then move on to the next lesson.